Alright guys, 5:30 here in London. Let's have a look at the main moves in the market for the day and for the week as well. If we start with today, so main story of the day was the pound and Theresa May speech, 2:15 in Florence, Italy. So let me just bring up my pound chart here. Let me just get paper pound here. So the main reaction that we've seen following her speech was this candle here. So a big move to the downside. We're trading at around above the 136 handle. Managed to break below the pivot level. Managed to take the low of the day. Tested the S1. And now we're just hanging around in between the pivot and the S1. So the main thing she said was that the UK, so there increased possibility of leaving the EU prior to March 2019. And then she said that the UK will cease to be an EU member in 2019. UK will leave the single market and the customs union. So negative reaction seen on the pound following the three main comments. And then you have some comments later from Michel Barnier, so he's the head of the negotiation, Brexit negotiation, but from the EU side, and he said that May's speech was constructive, and she expressed the willingness from the UK to move forwards. So some positive comment here, but the reaction that we see in the pound was more to the downside. So that was the main event for the day. If you're interested in Canadian dollar, you had some data coming out this afternoon with inflation rate lower than expected. So we've seen this move to the downside, 130. Managed to break the R2 level, managed to break the R1, a bit of profit taking, retracement, and now we're trading at, so this is Canadian dollar versus the US dollar, trading at 0.81, just a few ticks above the pivot level for the day. So these were the two main products that moved today. If we have a look at the week, if we start with the euro, let me just bring my euro chart here. So this is the euro for this week. So as you can see, start of the week pretty quiet, because obviously the main event of the week was the Fed interest rate decisions and press conference from Janet Yellen. So Monday quiet, Tuesday, Monday here, not much happening, Tuesday neither, and then 7:30 Wednesday afternoon, Wednesday evening, hawkish interest rate decision. So they didn't change monetary policy, they didn't change interest rate, but then the different comments and the inflation forecast were not as low as we were forecasted. So this is more hawkish FOMC meeting. Then US dollar strength, euro pushing lower here. So we're trading at around the 120 level, 2070 level. Trade all the way down to tested the 119 handle. And euro hasn't been doing too much yesterday, Thursday, and today, Friday. So you can see similar pattern for the pound for the week. Just bring up the pound chart here. Pretty quiet week, Monday, Tuesday, start of the week. And then dollar strength, pushing the major currency pair to the downside. Not much happening yesterday for the pound, and then this down move following Theresa May's speech today, just mentioned a few minutes ago. So hawkish monetary policy decision, that means US dollar strength and safe haven, so gold, T-notes pushing to the downside. So really similar here in gold, Monday, Tuesday quiet. Gold managed to break below the 1300 psychological handle, now turning to resistance. As you can see, this is this level, acted as really strong resistance level now, yesterday and today for the whole day. Equity reaction on the FOMC minute. Let me just bring the S&P chart. So because of hawkish, the knee-jerk reaction seen in the equity market was more to the downside, Why? Because hawkish decision means, let's say, higher interest rate. So it means for companies to borrow money, it becomes more expensive. So more expensive to borrow money, meaning that you can, let's say, borrow at cheap cost, invest, build new factories, create new jobs. So you generate less revenues. That's negative for the equity market. But then the reason why they increase interest rate is because the underlying reason is the economy is doing well. So really short-lived reaction to the downside. We recovered 1 hour after. We were trading at levels before FOMC minutes. So impact of the hawkish Fed decision on the equity market was really limited. And then if we have a look at oil, so as you remember last week, oil was trending higher following different comments from the different OPEC members saying that they're going to extend cuts, or they are in talks to extend the cuts for 3 to 9 months after March 2018. So that's supportive of the price of oil. That's what we seen last week. Oil start of the week touched the 47, so below the 48 handle. And when we closed on last Friday, it was around the 51 level, and then we've been trending in a range for the week between the 49.70 level and somewhere around the 50.80, sorry, just below the 51 handle. So yeah, it's been interesting week. Oil pretty quiet, equity market knee-jerk reaction to the downside on the FOMC hawkish decision, and then US dollar strength, major currency pair pushing to the downside. Today, Theresa May, bit of down move seen in the pound, and the safe havens of gold, T-notes pushing to the downside, negative territory for the week, and gold now below the 1300 psychological handle. Alright guys, that's it for the week. Hope you had a good time. Enjoy your evening, enjoy your weekend, and I'll speak to you next week. Thank you.